So it's a new one for us, and we've not covered this one before. But just on our sort of like trip around the weird little medium sort of sized pharma companies, I thought I'd talk to you about a company called Lantheus. They're about 6.5 billion, so not much bigger than Axum, which we covered last week. But this is a completely different kind of company. Again, lots more approved drugs. Quite a well known company in the industries that it operates. Essentially, Lantheus focus on tools and drugs that help doctors see inside the body and more recently to treat conditions with targeted radiopharmaceutical drugs. So here's a little bit about their finances. Fourth quarter revenue, they just released them this week. Was about 391.1 million. This is in dollars. It was up about 10.5% year over year, and the full year revenue came in at 1.534 billion, which was up about 18.3% year over year. So on the quarter, op profit was 151.8 million. That actually decreased 8% year over year. Net income for the quarter was 115.4 million, and that was a decrease of about 6% year over year. And free cash flow was 141.4 million, an increase of about 41.1 million year over year. The quick skeg at the cash balance, Steve would tell you about $913 million in cash. So doing pretty well. The two sort of druggy, sort of performancey tools are called Pylarify and Definity. Pylarify's sales were up 15.7% year on year to 266 million. That's on the quarter. If you want it on the full year, it's up 24.3% to just over 1.05 billion. Definity, which is a newer drug, 86.2 million, up 17.9% year over year on the quarter. On the full year, 317.8 million, up 13.6% year over year. In terms of a guide, they said that they'll probably do about 1.545 billion to 1.61 billion. The upper end of that is about 5% growth. Adjusted EPS, $7 to $7.20. Which would be a jump of about 6.5% at the top of that guide, and free cash flow guidance of 550 to about 600 million. So pretty decent over the year before. So the prostate imaging drug Pylarify has become the first radiodiagnostic blockbuster. It's got about $1 billion in sales for 2024, and they say that the addressable market for it has continued to expand. They said that we estimate the addressable market to be about 2.5 billion in 2025, up from 2 billion in 2024. So quite hefty growth in the market as a whole. And I think the total addressable market for the drug will be about 3.5 billion by the end of the decade. And that was the president, Paul Blanchfield, who said that. So they've got a study on at the moment, which is called the Mirror Study, and it's basically assessing Pylarify's in sort of favourable settings. It's on track with its expected completion. Is basically new use cases for Pylarify coming in Q4 2025, which is perhaps why the guidance is a little bit weak. It's not going to capture all of that, but the study is basically just to increase the addressable patient population that they can use it on. One of the other things that's quite interesting is that there's new reimbursement codes for Pylarify, which are favourable. Reimbursement codes are a Medicare thing, I can explain that later. I'll get onto that when we get onto the ASP stuff. So there's some multi-year customer contracts. Pylarify has clear clinical advantages. It's got a longer half-life, has more broad payer access, and that kind of supports its market leadership position despite having some competition in its sector. So there is this ASP-based reimbursement, which is sort of a potential thing on the horizon for them, which is why I think they're an interesting company. But basically, the CMS may adopt this ASP-based payment rules by January 2026, which actually could further enhance Pylarify's growth. So just to break those down for you, the CMS is the Center for Medicare and Medicaid Services. So that's the US federal agency that administers Medicare and Medicaid and also the CHIP, Children's Health Insurance Program. And they set the payment policies for healthcare services, and they do this by something called ASP, which I think stands for average sales price. But essentially, this is the price that manufacturers get to sell their drugs to purchasers. It's basically based on an average market-based price, and it means that Medicare and Medicaid don't overpay for their drugs. However, this 2025 guidance that they've issued is based on these current payment structures and not on this. So if it was to come in any earlier, this growth could be a little bit better. In terms of international expansion, they've acquired a company called Life Molecular Imaging and another company called Neurosec, and that basically strengthens Lantheus's international presence. And they're also going to explore more US outside of US opportunities. And they have a particular focus in the EU. They're saying they're doing this with a cautious approach. They're looking for some real quality out there. And they've got two pretty exciting drugs in their pipeline that they highlighted in the latest earnings call. They're catchy named MK6240, which sounds like a fax machine, but that has shown significant advantages in detecting early tau tangles and is involved in numerous clinical trials, which I believe is... tau tangle is a type of cancer, I believe. I'm not entirely sure about that. It might be one to have a Google. And the NAV 4694, which must be an upgraded version, also has potential sensitivity advantages over its competition, which they say will position it well against other diagnostic methods. So they're not resting on the laurels, Steve. They're trading at about 20 times earnings, which you'd expect for the sort of low growth that they have here. But I think they're expanding quite nicely. I think they're quite an interesting company. I appreciate this will be a sector where people will want to shy away from because it's difficult to understand. But these are on the periphery of what I think the layman can understand. These are not drugs per se. They're more like tools to find issues in the body. And Lantheus is the market leader. Steve?
Yeah, it's a hard sector, by the way. Tau tangles, as I look at it, are Alzheimer's related by the look of it. So, also known as neurofibrillary tangles. In healthy neurons, tau normally binds to and stabilizes microtubules. In Alzheimer's, however, abnormal chemical changes cause tau to detach from microtubules and stick to other tau molecules, forming threads that eventually join to form tangles inside neurons. So I think Alzheimer's, which we talked a little bit about last week, I think, in the context of, some other various other ways. But interesting stuff here. I mean, I feel like, yes, this is a complicated sector. This is a hard sector. There's obviously a lot of technical stuff here for those who want to get into it. And that might be the case with this one here. So, look, it's things that we know about this kind of industry are the following. Barriers to entry are extremely high, for good reasons, by the way. All of this stuff is approved and regulated to within an inch of its life, because if it's going to get shoved into somebody for some medical purpose, it better be very clearly tested and approved and signed off and regulated and so on. And this is generally true whether it's drugs or whether it's tools, effectively. So obvious high barriers to entry, that generally results in quite nice margins. And what you see from Lantheus is quite nice margins, especially at the kind of gross margin level. That's more than kind of healthy numbers there. There have been, they were kind of kicking around the 40s or so, or high 40s. And since the approval of Pylarify, that was sort of 2021, I think they've gone to sort of 60 and high 50s as a boost from that. So good signs. If you look at then, you can work your way into a kind of total market here, which is about half the market cap. And you think add in a few more bits there. I can see why you think the odds are on your side with this, even if you're not professing to be an expert in the medical kind of profession. You're looking at, you were talking sort of 7 to 7.2. Going forward takes you to about 12 times earnings. That's not crazy for a company that in this space. And unlike, I think we said this last week a little bit, but it's not a wildly dissimilar idea. 12 times earnings is about right for this sector, but the trouble is 12 times earnings usually comes with a massive market cap that's hard to grow unless you can really blow the doors off something. This is 6 and a bit billion, market cap. There's plenty of scope to grow this in a meaningful way if either of your two things coming through gets approval. So interesting here, and I sort of wonder whether you can work your way into this in one of various different ways. You can pick this up as part of a basket. You can think the odds are on your side, especially in this particular case, and look more closely, even without kind of diving into the really deep. Well, what are the chances? Sorry, of next stage approval on the catchily named MK6240.
Yeah, and I guess it's key to point out, Steve, as well that this has not been like one of those biotech companies where the approval happens and Lantheus shoots up in price and that's it. You've missed it. This has been a steady kind of grower. It's for just over the last 5 years. I say steady. It's five bagged in the last 5 years, but it's not been like your crazy biotechs where they go far too high and they overcorrect, and they go far too high and they overcorrect, they go far too high. This has just been a company, growing at a fairly nice pace, and I guess I wouldn't bet against that continuity. I think they're in for a maybe a fairly soft year, but I think they've got $1 billion in cash on a $6.5 billion market cap, and they want to start making some acquisitions, Steve. And with that kind of money on that kind of market cap, they can make a real dent and acquire some pretty interesting sort of pipeline-y kind of drugs, late stage pharma companies. And I wouldn't be surprised to see this one kick on further.
Overseas expansion is always interesting for this kind of operation, and I think it's good to see whether there's an opportunity to do that via something that's kind of more established. You mentioned they got an eye on Europe and sort of outside the US and tentatively looking over. I think that's good, and it's often the case, I think, historically, that the likes of me find it easy to overestimate the risk of screwing this up by overpaying. It is there, the risk of screwing it up by overpaying. You've got $1 billion, don't waste it on your balance sheet. But when there are clear things that you can stand to gain from your partnership in terms of operating synergies, opening new markets, and so on, that does give you a bit of a margin of safety in these kind of areas, and it sort of makes it a bit easier to pay sensible but not kind of crazy numbers, because actually, if you think, well, I'm going to pay not 6 times, let's say 9 times EBIT or something, but I reckon we can also pull out half the costs or boost our sales by pushing things through here. We can bring that down to effectively paying 4 times EBIT. Things start to look very cheap, and it's the kind of deal that this business, maybe not in particular, but this type of business is uniquely well positioned to do, and because it stands to gain a lot from it. There's more of a payoff than just bolting on another business here.
Yeah, agree with that, Stephen. I mean, like I say, if they don't come across something that they want to buy, maybe half of that could go into a buyback, which would immediately wipe off 10% of the share count or there or thereabouts. So there's plenty of things that they can do. I'm not in the market of advocating for a buyback at the moment. I think they've despite the fact that they make plenty of free cash flow, I think they could make a couple of acquisitions in this area, not really make much of a dent in their cash balance, and pretty much have it all replenished by the end of the year. So
you've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.